Hello, welcome again to another presentation for the solution of a case study HND 2025 question 4. Before you go through the solution, first of all, go through the question so that you can understand. So for time constraint, we'll just go ahead to solve. We have one, determine the depreciation rate of physical automation equipment. So what we need to know is that for the office equipment, we had the constant method, using the constant method for the depreciation of office automation. So what we're going to do is that we're going to see, okay, we're trying to solve it here. So we'll solve it here. We have, okay, we're going to see that, okay, determination of the rate, so calculation of the rate, calculation of the rate, So to calculate the rate, we know that, okay, our formula to have the rate, we know that the rate is equals to 100 all over lifespan. 100 all over lifespan, and then we know that the lifespan, according to the question, or the useful lifespan, is 20 years. So we have the rate now be 100 all over 20. So the rate is going to give us, when we divide, it's going to give us 5%. So this is our first solution. Okay, now let's go to the second. So we are through with this. Let's go now to the second, find the creation date of the enterprise. Okay, so let us go to find the creation date of the enterprise. The creation date of the enterprise now. The creation date of the enterprise, this is how we're going to work it out. So this is what we are trying to do. So we are working on this all required creation date of the enterprise. So we're looking on the creation date of the enterprise. So the creation date of the enterprise, we are trying to solve it here. So creation date of the enterprise, calculating creation date. So to calculate the creation date, what we need to understand is that it was to give the information concerning the first fixed asset, which is office automation. So this is what we're going to do. We're going to first of all analyze it. Now say that our OV is equals to the question is 18 million. And then we have our rate. We have already calculated our rate. Our rate will be 5%. So R is equals to 5%. And then what again do we have? We need to know that the accumulated depreciation was accumulated depreciation was 7.2 million. 7,200,000. What again do we need? I think that is all for now. And then we need to know that N. So calculation of creation date. So we can put creation date, can put N. Okay, so we know that, okay, to have the accumulated depreciation, so we know that we need to know the formula for so accumulated depreciation is equal to original value times the rate times time. We can put N all over 100. Okay, so what I'm going to do is that let me put N here times N. So what I'm going to do is that we are going to first of all do this. So we are going to put this in a formula. So we have 7.2 million, which is our accumulated depreciation. It's because our OV there is 18 million. Okay, 18 million times the rate. The rate is 5% times the N that we don't know. Okay, so that's how we're going to work it out times the N. So it's always good to put it in, but I'm going to use months 1,200. So if we do all our rough calculation, we are going to notice that N, our N here will be, our N here will be 96 months, 96 months, which is 6 months is approximately, I think, 8 years. And 6 months is 8 years. So on our 96 months, which is 8 years. So we're going to have 8 years here. Okay, so from then, for us to calculate the date of creation of the enterprise, we know that this account was given before inventory. Okay, before inventory. So we're going to take that before inventory now, which means that the last information was calculated on the 31st of December 2021. So I'm going to come here and say, okay, let me continue here. I'm going to say on the 31st of on the 31st of December, we have 2021 minus 8 years. Minus 8 years, okay? So minus 8 years is going to give us, when we do all our calculation, we will now see that the date of creation will be on the 1st of January 2014. 2014. So this is our date of creation of the enterprise, 1st of January 2014. Okay, so that's the date of creation of the enterprise. So now we are through this. Let us go to, sorry about that, we are through this. Let us go to calculating. Let's go to work one number C. So let's go to C. C, we have been asked to calculate the original value of the transport equipment. Okay, so this is under the constant, the reducing balance method of depreciation. Okay, so what we're going to do is that calculating the original value. So this is what we're working on. This is what we're working on. So we are doing this. We are calculating this. So this is what we are solving. So what we need to know is that, first of all, start with OV, which you don't know, question mark. And then we have a depreciation, accumulated depreciation. The total depreciation there was 250. Okay, 250,000 francs. And then we have, what have they given us again? We have to calculate the rate, okay, the rate. Since we're under the reduction balance method, we know that we have to take 100 divided by 5 times 2, which give us 40%, okay, 40%. So we need to calculate now. What do we have to calculate? We calculate the duration that we have used to have this amount. So it was on the first of 10. So it was on the 1st of 10, 2021. That was when it was put into use to the 31st, to the 31st of, to the 31st of, to the 31st, to the 31st, 31st of December 2021. So when we calculate all of this, will give us 3 months. Okay, so we have 3 months. So from here now, since we have 3 months, we just have to use our formula. We know, okay, know that accumulated depreciation is equals to original value times the rate times n. Okay, for working years. So let me continue here. Our accumulated depreciation, which you already know that our accumulated depreciation is equals to 250. So we're going to say 250. 250 is equals to our OV, which you don't know, times the rate. Do we know the rate? Yes, we know the rate. The rate is 40% times the time is 3 months. So we have our 3 months divided by 1,200. So if we do our calculations, we're going to see that OV will give us a total amount of 2.5 million. So our OV will be 2,500,000 francs. Okay, so this is our original value. So what with that, now let's go to the next work required. I'll be waiting for your comment in the comment section of this video. And remember to like, share, and subscribe to this channel. So let's go to the next one. This one will be accounting recordings. Okay, so we'll do the accounting, the necessary accounting recording. But before we go to that of accounting recording, we need to do some rough calculation. So preliminary calculation before accounting recording. So we have a preliminary calculation. before the accounting recording. So we need to do some preliminary calculation. Okay, so we have preliminary calculation. What are we going to calculate? We're going to calculate the depreciation for this year. Okay, so depreciation for, so I will just put it down bracket depreciation for the year 31st of December 2022, because we did not yet do the depreciation. We did not calculate depreciation of 2022. So I'm going to start with the office automation. So office automation, we're going to say, okay, since it was constant method, so annuity was constant, so annuity is equal to original value over n. Okay, so we'll just continue original value over n. So we're going to take our original value here is we already said our original value was 80 million as we calculated. 80 million divided by n, the n there was 20 years, so this is going to give us 900,000. Okay, so we have 900,000 here. That's what we're going to record. So the next one we have transport equipment. Transport equipment. For the transport equipment, we are going to, first of all, in order for the transport equipment, we're using the net accounting value. Okay, we are going to use net accounting value. So we're going to use net accounting value times the weight times n all over 100. So net accounting value here, to have net accounting value, take original value. The original value was 2.5 million minus the accumulated depreciation that we had. Okay, so this will give us the net accounting value. Okay, times what? Times 14 times 1 year. We can put 12 months times 1 year. We can put 12 months divided by, since we're using years, so we're going to have, if we do our calculations, well, it should give us, I think, 900,000 francs. 900,000 francs. So that's it. So let's go now to record. Okay, so we're going to record now. So we're going to record accounting recording now. So we just have accounting recording. As you know that our recording is on the 31st. Okay, 31st of December 2022. So we're going to debit account 6813, and then we credit account 2844. That is a depreciation of office equipment automation. We have 2845 depreciation of transport equipment. So this amount we take 900,000 francs. This one will take 900,000 francs. Then the total will give us 1.8 million. 1.8 million francs. So that's it about our journal. So our narration will be being depreciation. Being depreciation for the year 2022. Thanks so much for watching this video. Like, share, and subscribe. See you again in our next presentation.